Wall Street. The name itself evokes images of power, wealth, and unthinkable influence. It's a place where fortunes are made and lost in the blink of an eye. But how did one street in New York City come to shape the entire global economy? Today, we're diving deep into the history and power of Wall Street, exploring how it became the financial engine that drives not just the U.S., but the entire world. Get ready, because this is the story of how Wall Street became Wall Street. To understand Wall Street's rise, we need to go back to its humble beginnings in the late 1700s. Believe it or not, the story starts with a literal wall. In 1653, the Dutch built a defensive wall along the northern edge of New Amsterdam to protect against the British. The wall didn't last, but the street that ran alongside it, that stayed. By 1792, a group of 24 stockbrokers met under a buttonwood tree on this very street and signed the Buttonwood Agreement, marking the birth of the New York Stock Exchange. Imagine that. Just a handful of brokers trading on a sidewalk, barely a handful of people involved. Fast forward to the 19th century, and Wall Street had become the center of America's financial markets. This was when the idea of publicly traded companies was really taking hold, and as America grew, so did the power of this street. The world had its eyes on New York, and Wall Street began to carry the weight of global trade and investment. But don't get it twisted. Wall Street wasn't always smooth sailing. The Panic of 1837, a financial collapse triggered by a collapse in the land market, was one of the first major tests of Wall Street's ability to weather economic storms. And believe me, Wall Street would face many more. By the late 19th century, Wall Street wasn't just about trading stocks. Investment banks like J.P. Morgan & Co. and Goldman Sachs were rising to prominence. These financial institutions weren't just brokers. They were shaping the very future of industries like railroads, steel, and oil. J.P. Morgan, in particular, became a force to be reckoned with. In 1901, he engineered the largest corporate merger in history at the time, creating U.S. Steel, which would dominate the steel industry for decades. But it wasn't all about the big players. Wall Street had a dirty little secret. Manipulation and fraud were rampant. In fact, insider trading wasn't always illegal. It was part of the financial game. People were willing to risk everything for a quick profit. But in the face of all that greed came something that would change everything: the Great Depression. The 1929 stock market crash wasn't just a financial blip. It was a cataclysm that brought the entire U.S. economy to its knees. The Great Depression destroyed lives, jobs, and entire industries. It was the worst financial collapse in American history, and Wall Street had to reckon with the consequences. But in the aftermath of the crash came the New Deal and the creation of regulations designed to prevent another collapse. The Securities Exchange Act of 1934 created the Securities and Exchange Commission, SEC, which began overseeing Wall Street and its trading practices. No more unchecked greed. Or at least, that's what we thought. Even with all the regulations, Wall Street remained volatile. And while it was the economic engine of the U.S., it was still dangerously unpredictable. But after the dust settled, the stock market began to bounce back. The 1940s and 50s saw massive growth in the U.S. economy, and Wall Street was once again at the center of it all. Now, let's talk about the 1980s, a decade when Wall Street turned into the Wild West of finance. With the rise of corporate raiders like Carl Icahn and T. Boone Pickens, Wall Street's power and reach expanded far beyond anything anyone had seen before. But here's the kicker. These corporate raiders weren't just making investments. They were taking control of entire companies through hostile takeovers. Leverage buyouts, LBOs, became the name of the game, where companies were bought using borrowed money, saddled with debt, and then flipped for a profit. Movies like Wall Street with Michael Douglas brought the term "greed is good" into the public lexicon, and suddenly everyone wanted a piece of the action. But it wasn't just money being made, It was a bubble that was about to burst. By the late 1990s, Wall Street's focus shifted again, this time to the booming dot-com industry. The internet was new, and everyone wanted a piece of the future. Stocks in companies like Amazon, eBay, and Pets.com soared, even though many of them weren't making money. It was a frenzy, and Wall Street was right in the middle of it. The dot-com bubble inflated so quickly that no one really noticed how unsustainable it was. But in 2000, the bubble burst. The Nasdaq crashed, dot-com companies folded, and many of Wall Street's biggest investors were left holding the bag. It was another painful reminder of the short-term greed that still controlled the market, but once again, Wall Street picked itself up and the market recovered. As always. Now, let's talk about 2008, the year that shook Wall Street and the entire world. The global financial crisis was the result of risky mortgage-backed securities, subprime lending, and unregulated trading. The housing market crashed, banks failed, and massive companies like Lehman Brothers went bankrupt. But it wasn't just the banks that felt the pain. The ripple effect went global, leading to millions of people losing their homes, their jobs, and their savings. Wall Street's greed and disregard for risk led to the biggest economic collapse since the Great Depression. In response, the U.S. government bailed out some of the biggest financial institutions, but it came at a steep price. Massive protests against Wall Street's greed erupted, and the entire financial system was once again forced to reconsider its values. Could the system be fixed? Could Wall Street change its ways? Only time will tell. But one thing's for sure, Wall Street's power is undeniable, and it continues to shape the global economy. So what is Wall Street today? Is it still the powerhouse that drives global finance? Yes and no. Wall Street remains the heart of American finance, but now it's a far more globalized, volatile place. Stock market swings can happen in an instant, algorithmic trading can move billions of dollars in a fraction of a second, and Wall Street is constantly adapting to new economic realities. The question is, has Wall Street learned its lessons from the past? With constant innovation in fintech, cryptocurrencies, and blockchain, will Wall Street remain the global financial leader, or will a new player rise? Only time will tell, but one thing's for sure. Wall Street's power is undeniable, and it continues to shape not just America, but the world. From humble beginnings as a street lined with a wall to becoming the epicenter of global finance, Wall Street has evolved, struggled, and thrived through it all. Its role in shaping the world's economy cannot be overstated. Whether you love it or hate it, Wall Street's influence is undeniable. And if the past has taught us anything, it's this: failure might be inevitable, but growth is always possible. Thanks for joining me in this deep dive into Wall Street's rich history. Make sure to hit that subscribe button for more content on the most powerful forces shaping our world.